Another day and more terrible news for Peloton, which is down 20% as we speak intraday, so that's midday. Now trading at $25 a share, which I think is the lowest it's ever traded at, or basically at the lowest it's ever traded at. This is coming off the news that they will be temporarily shutting down production of their bikes and treadmills because demand just is not catching up. I posted another video here saying that there were going to be tough times ahead. I thought that I didn't think it would necessarily be this bad. So I want to discuss briefly my thoughts around the latest news, what I'm going to be doing, and again, this opinion is not advice, but what I think is the right way to play this. So, clearly I'm a glutton for punishment. I continue to buy. I bought more today on the downswing because I still think this company long term has great prospects. Short term, definitely not. And I actually think the drop presents an entry price now where it becomes a very interesting acquisition. I think Apple, Nike, Lululemon, I've even heard Netflix could acquire this company. Again, it still has 2.7 million subscribers paying $40 a month. That's the juice. That's where all the value is. It's the 2.7 million subscribers. The bikes they're selling are just the way to get those subscribers, but no one really, that's not where the value is. The value is in the subscribers. And I think that the logic for Apple is they're trying to get into fitness. Tim Cook has made a statement that in the next 10 years he wants Apple to be seen as a health company. They're doing that with the Apple Watch. I think Peloton folds in with this premium brand. It would definitely help. And Peloton's biggest issue is demand and supply chain, and Apple's great at both of those. So I think Apple makes sense. Nike, again, great brand, but right now they just sell one-off T-shirts and clothes, and I think they'd love to get subscription revenue, which is valued more highly. Same thing with Lululemon and Netflix. Again, they already have subscriptions, but another way to layer on additional subscriptions and more users subscribing. So again, I've continued to, this is my biggest loser, but I put my money where my mouth is. I bought more shares today. The stock is now down 85% from its highs. I'm only down about 30%. I say only. It's still significant, and it's by far my biggest loser in my entire portfolio history ever of investing by total dollars, not by percentage wise. I've lost more percentage on small bets here and there, but I've lost a couple $1,000s on this one. But again, I buy because I continue to believe in this, and I do think that an acquisition could present a short-term bump. So again, I'm a long-term believer in the next couple of years it'll still be a great company, but you could see them get bought out and see a big jump in the price this year if they do get acquired. Typically, when there's an acquisition that comes in, they offer a premium on the stock price. The other day it was Activision got bought by Microsoft for I think it was a 30% premium at the existing share price. So if you do the same here, 30% premium on right now, it's trading, it went even lower now. It's just under $25 now. But still, you're talking an additional $8 premium, so it brings it up to 32. I'd still lose money. But I think if you want to look at this, again, there could be significant headaches still ahead for this stock. The momentum is going nowhere but down. And they have earnings coming up, so that's also going to be probably pretty terrible. They're probably going to lower guidance. So I think an interesting way to play this is with options. Now, I typically don't go into options because they're risky. But I think with a falling knife stock like this, where the stock price continues to go down, you could look to try to catch a bump. So what you would do, you should buy out of the call options. So what an option is you have the right but not the obligation to buy it at a set price. So let's say you said, I want the right to buy it at $40, let's just say. It's going to cost you very little because it's a very low likelihood that the stock price jumps, to get to $40, 40%. So you would actually be paying a very small premium. Now, if it doesn't go there, you lose your money. But you basically make a bunch of small bets and hope that in the next year, actually would hold off for a couple months, or maybe a month. But if it does pay off, you'll make 100 times, 1,000 times your money. So these are risky bets options. I'm actually going to make another video about options and leverage and explain how they work in more detail. But I am looking into seeing if a out of the call option on Peloton in the hopes that they get acquired and you see a massive bump in the price is something. I'm going to have to do the math, but I think that that's how I might play this out and continue to ride my shares because I really do believe this company now is a juicy acquisition target. And I think 2022, when we look back, we're going to see this as the year of the acquisition. Lots of companies, Apple, Google, Facebook, Berkshire Hathaway, are sitting on tons of cash. Meanwhile, there's tons of growth stocks last year that have great products, great brands, and great teams, but have seen their market caps down significantly. And so I think a lot of these big guys can pick them up for pennies on the dollar and fold them in. There is risk because these big guys like Apple and Facebook and Google may face antitrust legislation, which is why if there is a announced acquisition and the stock price jumps, I think I'm going to get out because I'm not sure if it's going to get acquired. I think Peloton is a little less risk, but I know with the Activision one, the price jumped of Activision, but not all the way to the purchase price of Microsoft. Basically, that typically shows you how much people believe in it. If they say we'll acquire you for $100 and the price jumps to 99.5, it means people are pretty damn sure it's going to go through. If again they say we'll buy you out for 100 and the current stock price is 70, it goes to 72, it means people are probably don't think it's going to happen, which is why it wouldn't go up much. So again, I think we're in heightened antitrust. So any acquisition has a higher risk of failure than it did 5, 10 years ago. But I think if anyone acquired Peloton, I don't think there'd be any antitrust there. I think it's more risky with software companies or even content. I do think there is some risk with content like Activision. Oh, what if you made Activision games only for Xbox? Is there risk there that people think that's anti-competitive? Those are my thoughts on Peloton. Again, could be more pain ahead, and lessons learned in that you should never try to forecast consumer demand coming off of record years after a pandemic. I know that's kind of a one-off lesson, but maybe be a little more conservative. I took management at their face value when they gave guidance. They said, here's how much we think, and they've been dead wrong. They thought 5.4 billion. Now they think, then they said 4.4 billion. They're probably going to come out and lower guidance again, which is always a bad sign. I made a video actually about expectations here. And so, that is a lesson I've learned. And to me, my grandfather always said that as long as you learn something from it, it'll help you make better decisions moving forward. And that's all we can do. Investing is just making decisions. And so I try to have a process. My process has worked pretty well. This has by far been, again, my biggest loser from a total dollar amount. So I'm trying to take as many lessons from this as possible and trying to, I should be much more conservative with my estimates, and B, I think it's important again to say, let demand, it's even if this is a great product, how many people are really going to buy? Is there really a market out there in demand? And it's always better to have a company like Tesla where the demand far outstrips supply than Peloton, where last year, demand far outstripped supply, but now they have the supply and now demand's gone. So clearly there was not as much of a backlog of demand as people thought. So lessons learned. Let me know what you think of Peloton below. Are you buying, selling? Are you selling? Are you buying puts? Are you actually betting it's going to keep going down? I'd love to hear your thoughts. Thanks so much for watching and talk to you next time.